What's up, guys? It's September 4th, 2025. Had a small pullback bull trend day today. Pretty interesting day. These days don't come around too often. In terms of the market cycle, we had a trading range yesterday. We had a nice rally EOD as well, and then today that rally continued, broke out, retested it, and then we rallied for the rest of the day. So market cycle, leg one, breakout, channel, we channel higher, so maybe we get a trading range overnight session or tomorrow, or the market keeps channeling. We don't really know yet. The reason small pullback trends happen is because bears are consistently getting trapped and bulls are forced to buy the market highs. They're chasing the market. So look here. This leg looks like it can get a second leg down, but then it rallies. It actually does get a fractal second leg down. But for the printed chart, 5-minute chart, there's no more bear bars after these two bear bars. So the market rallies, bears are buying back shorts. And now the price is always, it's generally around highs. You know, you can buy this, we're still around the high, buy this bar, scalp a few points, or you can wait for this pullback, which was a quick touch, and then it rallied again, forced to buy back highs and sit through some pullbacks. So bulls are going to be buying in small pieces because they know they're going to be sitting through some pullbacks. So bulls are constantly chasing highs and buying in small pieces, while bears keep shorting, being forced to buy back the market because they're in a losing position. It's a pretty cool day. Yesterday was the breakout. Then we got the pullback today, channel phase, and then now we're channeling higher. Weekly chart starting to look more bullish. At one point in time, this was a bear bar. It sold off, and now it's rallying very close to the all-time highs. And here we can see that leg 2 I was talking about yesterday. 1 second, guys. So yesterday I mentioned a leg 2 trade. Bears get short up here. They short more down here. This green line is their break-even price. But bears made money, so this is a trading range behavior. And they buy back shorts. Now bears are buying back shorts at the same time the market's rallying. And bulls are looking to target the swing high and then go for 1 to 2R. With their stops being down here. Pretty cool day. Just buy the market and you make money eventually. I didn't trade today. I made a little bit of money on the overnight session, so I just wanted to book those profits, and then it ended up being a trend day, but it is what it is. Gap up, bar 1, bull bar closing on its high, bad fall through bar 2, but look at the rally on bar 2. Big rally. So bulls were getting filled above bar 1, and then they buy more lower. So they buy up here, they get filled above bar 1, the market sells off, they buy more, and they can get out break even. So I'm just talking about these first 3 bars here. Bulls buy here. Let me get the fibs. They buy more below bar 2. And look at their break-even price. It's right here. So bulls make a little bit of money here, sell out of longs, and then we bounce into the EMA, or sell off into the EMA. Bar, what was that? Bar 7. Big bear bar closing on slow, and it creates a gap. Bears want a trading range and then a reversal. Bulls want this to be a pullback and channel. That's what they got. Follow through with bar. 1 second, I don't like that color. Okay, that looks a little more normal. Whatever. Follow through with bar 7, and then follow through with bar 8, and then bar 9 breaks the trend line. And look at where bar 9 rallies to. Bulls that buy the high of 6, hoping for the breakout right away, are underwater with 7 and 8. They buy more lower here, get out at break even, and then bears get their leg 2. It's a hidden leg 2. It's a fractal leg 2. I can talk about it real quick. You can see the leg 2 now. So bulls buy up here, market sells off, rallies to the 50% mark, bulls sell out of longs, and boom, that leg 2 is met. Leg 1, pullback leg 2, pullback leg 3, leg 1, pullback leg 2, trading range behavior breaks out, sells off. Just looking at the 1-minute chart, a lot of setups. See, this is why people like to trade the 1-minute chart, because of this price action, but then when they do, they get this price action. 1-minute chart is tough. I think the 5 minutes has all the information you need. Then we get a nice rally, 10, 11, 12, 13, 14, and then first opposite part 15. So if we weren't looking at yesterday's price action and just today's price action, here's the breakout. 15 is the first reversal, and now the market's channeling, and again, we're waiting for that trailing range to get put in to complete the market cycle. So 10, 11, and 12 produces a gap. And that lets us know that bears are getting trapped. The gap happened right around here, 50% of bar 7, and it's trapping bears. They were looking to short here. Instead, the market rallies, trapping them, forcing them to buy back shorts, and now we have a good breakout between 10 and 14. 15 is the first opposite bar, so now we're channeling higher. And the reason the channel phase, so there's a breakout, channel, and trailing range phase, and each phase has a different type of trap traders. In the breakout phase, you're generally trapping traders at extremes because it's limit order traders. So this market rally is trapping limit order traders because the pairs have limit orders here. Then you can see 15, they quickly, or 14 rallies, they sell higher and they quickly get out on 15, buying back shorts. The channel phase, I like the channel phase the most. That's what my system is in the channel phase. The channel phase is traders are constantly looking for reversals. So bears trying to short here, 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 here. Every bear bar was an attempted reversal. And then so 21 tries to reverse. For the bears want the market to reverse on bar 21, but then it's rallies, trapping bears, they buy back shorts. So here, low of 21, bears short it, they get trapped, they short higher, boom, there's your leg 1, 2. Do it again. Now this system doesn't work all the time. Today it's going to work because it's a channel phase, like we channeled all day, so the majority of trades are going to work. But I generally only look for 1 to 2 trades within that direction that I wait for a trading range. Today is the exception. So bears short here, they short higher, get filled where bears new average price is. This green line. Look, we miss our target, but we also don't get stopped. Actually, let's see. I don't think I get stopped out because I put my stop 1 tick beyond, so it would be like right here. Maybe I do get stopped out on 39. That happens, and then I go on to the next trade. Bears short the low of 36. They're short on 39. High here. The bears that short the low of 39 short higher. This green line is their break-even price. Market sells off into it, gives bears a chance to buy back shorts. Boom, we hit our target bar 43. And then again, it works again. This is why I like this system. The rally for my target, becomes the setup for the next trade. Bar 42, bears think this is a lower high. Is that right? Lower high. They short 42, think it's going to collapse. Instead, they're met with bar 41 immediately underwater. They short the high 44, and then look at the break-even price. Again, it's tagged and 1-to-1's met. Today was the day to run the system, and I didn't trade it, but that's okay. Look at it again. Bears short the low of 44. Market rallies 47. You get filled on 48, you get filled on 49. Boom, 3 bars. You hit your target again. So you can see the trap traders are bears in this case, constantly looking for a reversal, and they have to average in and get out, or they take a bigger loss. Again, it worked again. I was looking here, I thought it was kind of climactic, but the market did keep going. So bears see 49, they short it. They're trapped because bars 50 through 53 rally, and they have a quick opportunity to short here. Look at 54, it barely touches the break-even price, and then boom, bears buying back shorts. Front running bulls adding to their position, second leg traders adding in. 3 types of traders looking to buy back the market, or buy at the market, or buy the market around the same level, and bang, 1-to-1. Do it again. This isn't the best trade, I think. It's kind of climactic. I'll wait for a deeper pullback, but it did work. Look, it did work for getting stopped out. So bears short the low of 54, trapped again. They short 58, and then look at the break-even price is tagged. I don't like bar 60 and the tail on 61. I'll be honest with you, I don't think this is the best trade. Right around here was a better trading, in my opinion. But look, you don't get stopped out, and then you meet your 1-to-1 again, leg 1, pull back leg 2, bar 65. Do it again. So this one's interesting because bar 60 is kind of in the middle of trading range. I would pull from the tail of 61 because at one point in time, 61 was a bear bar. It rallied, trapping them. So trap traders there. I wouldn't take 1 bar trade, but just to show you guys, at one point, bar 61 was a bear bar before it rallied. So bears are short down here. It rallies. They short more. Look at 62 and 63. maybe you get filled on 62 and your target's met on 63 with that tail. If not, you're gonna hit it with 64. You guys see what I'm saying? So this is how we can start to understand our system works better in certain market conditions. I traded I traded a system that works in the channel phase, and eventually I will have systems. I do have a system that works in the trading range phase, and I'm eyeing a breakout system, but I'm just not deploying it yet because I want to get really good at this particular system. Now look, we have a fresh breakout. The bears that short the low of 63, short higher, and they actually don't get their break-even price here. So this is a trade we'd missed. And then boom, the market rallies for the rest of the day by the close rally. If we wanted to count bars 64 through 69 as a fresh breakout, our system would be somewhat of like buying the close or buying the high of the last gap of that nature. I haven't back tested it, so I won't talk too much on that. But what we want to do is have one or two trades for each type of market phase, and then we have an overarching system filter that tells us breakout, okay, I deploy these trades. Channel, okay, I deploy these trades. Trading range, okay, I deploy these trades. And that's where the discretionary trading comes in, is that we have maybe 3 to 4 systems that we understand like the back of our hands. It will take years to develop. And then all of a sudden we just use an overarching box that tells us, hey, this is the market cycle, this is what you trade. This is the market cycle, this is what you're trading. And each system will have its probabilities between wins and losses, and we can curtail those to avoid things and here and there. Last trade, it looks like it worked. Not a trade I would take because of how close it is to the end of the day. Bears at short 72, 73. Market rallies. Bears short 75 to get out break even, and they do that. They get their break even attempt on bar 76. Boom, the market rallies 77 all the way to 81. It's a really cool day. Small pullback trend. They don't come too often, so I hope you guys did good. If you learned something, share, show. Don't be a hoe. I'll talk to you guys tomorrow. It's Friday, so let's end the week strong. First week of the month is done after tomorrow, so let me know how you guys did. Thank you for your time, everyone.